everyone. Basil Chapman sitting in for Tom O'Brien. Tom is at the World Money Show, and it's my pleasure to be here. And I usually have the 11 o'clock till noon, Monday through Friday, market days, the Tiger Technicians Hour. Same call-in number, 877-927-6648. Same format. And you just call in and we'll go through whatever it is you would like to look at. And I just wanted to tell you that the Dow right at this moment, having closed, is up 211 at 17,884. I have the charts right here. This is what I show during my show, and I show my subscribers to my opening call every day. I show all these different patterns. And here you've got the daily in a brand new leg leg A. That is a single leg that went from this yellow line, the 200-period exponential moving average at 17,037 on the 2nd of February. Huge move up. It's done that many times before and then failed, gone to lower lows. This is trough D in the Chapman wave. This is the test. The weekly chart, let me just expand that I was talking about in the previous hour. Will the Dow break 18,103 to start leg D? What is leg D? Let me just quickly do this so that those of you who are new to my work, simply put, you find the lowest, most obvious low bar, and you merely count each successively higher peak, and it should go 4 peaks higher to a leg D and then a peak D. And under those circumstances, it sounds simple. Sometimes it's very difficult to actually have the patience to do that, but that's the concept, and that's the basic requisite, is to have a buy signal that goes to a buy mode going to a D. Well, the weekly chart needs a leg D. It's very seldom to go to all-time highs and fail at a C in a weekly chart or a monthly. So I'm expecting that somehow, some way, the Dow goes to 18,104. That's number one. The support now on the Dow is at 17,624 to 17,570 on the shorter term. Okay, now the S&P, SPX. X, the S&P was up 21 points at 2,062. It too has got a leg A, but it didn't quite break. It did it 2,064, 62, 2,063. Yes, no, it didn't. It needs to break it by about a point to start another leg up here. That'll be the real A. But here in the weekly chart, look how it's held beautifully, this up channel support, and it says there's a chance that if 2,039 support on the S&P doesn't break in the next week and a half, that if it continues higher, it will get to 2,093.56 to start a leg C. The implication is there will still be a pullback at some point in February and then a slightly higher high to start that leg D. That's my anticipation. So I won't talk about the monthlies other than to say at this particular point, the Dow and the S&P, the month hasn't finished, but at this point, both the monthly charts look fabulous. Now, I just wanted to do something else. I wanted to show the MDY, which is the mid-caps. Mid-caps might have started a brand new leg A, but what's very important is leg C in the weekly chart. Now, I've got an alternate count in the monthly, but it doesn't matter what the alternate count is. The 9-period moving average of 259 is support, and it's at 269 right now. And everything about the chart at this particular, tomorrow it could change, but right now it looks very positive on the monthly, the weekly, and the daily chart. But we'll see what happens between tomorrow's close for the weekly chart and Tuesday. By about Tuesday, we'll know whether or not there's a chance that we will go to all-time highs. This is at all-time highs. The mid-cap, the S&P mid-cap depository receipts. Now, let's look at the QQQ series. QQQ series needs at 103.76, up 80 cents. Needs to break that downtrend line, which the Dow Diamonds and the Dow did very decisively today. Needs to get to around about 104.30. And it's at 103.69 right now. So just as we're about to go to some other things, Twitter came out. Twitter is trading up 1.28 at 42. So it came out with, I think, a relatively a pleasant surprise there. What's important about it, remember I spoke about those Ds? Well, it's peak D in the 120-minute chart, and it needs to break above 42.47. That's a print. That's not overnight. It needs to do it during the day trading hours, and then it's recycled higher. And what's really important is that we had LinkedIn come out, and LinkedIn had a very good response. Now it's up 18. That's amazing. The high was 257.56 at peak D in the monthly chart, and look at this, 250. 1 right now. It's 6 points away from its all-time high. And that's going to be very important because it continues the daily legacy. Oh, it's an overlapping wave. Oh, this is going to be very interesting. So LinkedIn makes it very positive. Now, the Qs should be rallying right now from the close. The close is 103.76. All right, well, maybe it's a little delayed. We'll see what happens there. So now I want you to go to gold. Gold had closed. Let me just check that out. Gold is up 1 at 1266. It's just in a little trading range now after having a spectacular move. So the continuous gold has 1253 is very strong support. And 1247 is the support in the weekly chart, trading right now at 1267. Taking a little bit of a breather. My suspicion is that it will go to leg D in the weekly chart above 1309 at some point in February. The monthly chart is not that great, but we're doing one thing at a time here. And let's go. So silver closed down 11 cents at 17.28. Platinum was up 12 at 12.53. Copper's been the real laggard over here. But what did it do today? Oh, it actually bounced a little bit. That's a good sign. So we need copper to bounce, but it hasn't been acting very well. And you've got crude oil, CL. Crude oil right now is up. It's up 239 at 50.84. It's in a little trading range. And until crude oil can really get to the 56s, we're going to see what happens. It could happen the next day or two, but it better not break under 46, because if it does, that's just not going to be good action. The dollar DXY, dollar is at 93.53, also consolidating. Is fascinating. Dollar, gold, and bonds. The TLT, the Lehman 20-year T-bond fund, made a peak F in the Chapman wave. It's pulling back, and it's at 133.32. 133 to 132 is really the support that it needs to hold. If it doesn't do that, then 130.90 is the 9-period moving average in the weekly chart. And you can understand that after such a spectacular move, all of the gold, the dollar, and bonds just need a little bit of a breather, and I think that's what they're getting here. And I would like to say that that's... Okay, let's go to Jennifer in Wellesley, Mass. Jennifer, how are you?
Good, Basil. How are you?
Surviving this freezing, huh?
It's a lot of snow.
It's a lot of snow. You'd like to look at?
I'd like to look at Visa. I was in it and I took some profits, but I see it keeps going up. I wondered what you thought, what leg it was in. They're going to be splitting 4 for 1 next week.
Oh, that's right. Okay, so Visa trading right now at 271.80, up 6.91, and this is a very interesting chart because so you said you took some profits, meaning you got out of the position, or you took some off and you've got some left.
I got totally out of the position.
So you're out of the position. Okay. So the way I'm looking at this right now, I believe this is new leg B to the upside, and there's a chance that in the pattern I'm looking at, there could be what I call a Chapman wave squash formation between the stochastic and the MACD. And what's really important, if that's the case, what happens is from the low bar, in this case the low of 245.17, there's a tremendous pressure that builds up based on this particular pattern, and it takes the price very quickly to leg A, then to leg B, and then to leg C. And at that point, it could pull back a little bit as the stochastic starts to pull back, but the MACD takes the momentum. So the stochastic's what I call the torque. If you have a car with gears, that's like going from first to second gear, and then it goes into the higher gears, and that's the momentum that's built up by the MACD, the moving average convergence divergence. I like the pattern right now. I'm going to suggest, so because you had a position and you've taken it off, I'm going to suggest that if you get another position, I would make it a little bit smaller, only because you've already been in and you've taken it out because you got a little bit cautious. So I don't want you to get too aggressive here, although I do see it going higher. And what's really important about it is that the ABC, I suggest that if it pulls back, if let's just say there's weakness tomorrow, there's a report that comes out, job, whatever it is, and it comes out, and for some reason you get a pullback, you've got Apple at peak D, so you might have a bit of a pullback. So you pull back in Visa and it comes back to about the 267-ish area, somewhere between 267 and 265, probably where you got out. That's where I would start another position. And on that position, I don't know if 4 points is too much for you, but I'd have about a 4-point stop on a $267, 265 long. And I would go for that leg C and the leg D because the weekly looks strong. So I like Visa.
Very much, Basil.
I hope that helps you, Jennifer. Good luck. Thanks for calling. Folks, Basil Chapman sitting in for Tom O'Brien. I'll be right back with Brent in Martinez, California.